Well, if Liberals cannot take any comfort from last night's loss in LaSalle and Margaret-Don, they might find some in the latest annual inflation number. Earlier this morning, StatsCan reporting the annual rate has finally hit the Bank of Canada's 2% target, and that could bring some good news to consumers, but also present new challenges for the country's central bank. And with more, we're now joined by the Chief Economist with the Conference Board of Canada, Pedro Antunes. Pedro, thank you for joining us.
It's a pleasure. Thanks for having me.
Listen, let's begin with consumers here because, 2% is what the Bank of Canada considers a good inflation number. So now that it has been reached, and we've already seen some cuts, but is it safe to say that we're going to see even more cuts to the interest rate?
Yeah, so it's good news on both fronts, right? We've got inflation stabilized, so that basket of goods is no longer increasing at a rate that's two grand certainly, and hopefully that'll help on that end. And of course, the other piece is relief on essentially interest rates and consumer credit, and especially for those households that are holding mortgages that they got at very low rates that still haven't seen those mortgages renewed at these new higher rates. I'm sure there's some anxiety relief here for those folks. So good news. I think we have seen already 3 declines from the central bank. Likely we'll see a couple more before the end of the year.
Okay, a couple more before the end of the year. And when I look at the predictions around that, I've seen anywhere from 50 basis points lower to 200 basis points lower. That would bring the bank rate to about 2.5% by the middle of next year. What do you see happening here?
Well, I think the bank is trying to message what is a neutral, what they call a neutral rate of interest. Now, let's remember, this is very short-term rates that the central bank lends to essentially other banks. So it's not really the rates that consumers are going to see. But what they're telling us, the central bank is telling us, is that a neutral rate would be around 2.5 to 2.75. Central banks have been wrong before. They may readjust that over time, but we're essentially looking for the bank to get by the middle of next year to that rate of around 2.75, 2.5. So right now we're at we're at 4.25. We've got a ways to go. That'll be some relief over the next number of months for households. But the important thing to remember too is that the rates on the longer end, in other words, consumer rates, mortgage rates, those will probably not decline by the same amount. And in fact, we expect those rates to come off a lot more slowly and not ease to the same extent. Just because we've seen a period where rates have been phenomenally low pre-pandemic, even during the pandemic, we don't expect rates on the longer end to come down to those levels.
Mm-hmm. Well, it's interesting you say that because, of course, the bank also has been attaching this warning and continues to warn that, if inflation jumps back, if it's persistent, well, they can put on the brakes once again. Is there really this pent-up need to spend, do you think?
Well, I think I think households have been really hard hit. But again, when we look at the aggregate numbers, in other words, some households are feeling a lot more pain than others, and we know that's in the numbers. We're seeing that in some of the data that Statistics Canada publishes about household indebtedness. So we know that older households, for instance, don't have as much debt, don't have as much mortgage debt, and they're not feeling as much pain. Whereas younger households, lower income households have been hit by inflation more so than these higher income households, and certainly by higher debt levels. So there's definitely that dichotomy that's happening in the market. The other thing I'd say is that as the bank comes down to the neutral rate, we're still in a situation where we're above the neutral rate. In other words, the bank is still putting the brakes on the economy with rates where they are, and we have seen economic activity flatten out in the last few months, and certainly we've seen the labor market do the same. Employment growth has essentially stalled. So there may be room for the bank to move more quickly just to get to the neutral rate, to get to a point where they're not hitting the brakes anymore.
Mm-hmm. And to that, there's also this now fear being expressed, which we haven't heard for years, that the inflation may actually fall below 2%. What's the concern there if that happens?
Well, that's interesting. I think still, we're seeing underlying inflationary pressures. If you, for example, look at what was just published today from the Statistics Canada, and from the bank around what is the the key rates that the bank looks at, the key inflation rates, they've not come down to that 2% target yet. So I think there's probably still more upside risk on inflation than downside. However, it's a good question to ask, like, why would we target 2%? Why would we target lower? And I think in general, we don't want to see deflation. We don't want to see prices drop on the aggregate scale, on the overall basket, because that may in fact entice people to stop spending, to wait for prices to come down. This is the situation that, for example, Japan's economy lived for a number of years, where they were trying to get inflation back up to more normal levels because consumers were essentially on hold. And so you can imagine a situation where the economy starts to slow, prices get down below, inflation gets down below zero. In other words, prices start to fall, and that entices people to hold up even more, and that can cause a more significant swing in the economy that we want to avoid. So that's in general why we target, or why most central banks target that 2% to keep away from those negative numbers.
Pedro Antunes, always appreciate the time. Thank you for that.
You're welcome. It's always a pleasure.
Now, the finance minister did address the annual inflation rate today. Chrystia Freeland using the news to respond to a question that was posed by the Conservative leader on the carbon tax. Take a listen to how the issue came up.